Europe is burning up and in inflation hell. The price of natural gas has risen from 5 euros to over 300 in just 2 years. Now we're talking about 60 times price increase. That's the equivalent of $500 per barrel of oil. Now in France, electricity prices has gone up by 10 times over the last 12 months, and people in Germany are cutting down trees and stockpiling firewood to stay warm during the upcoming winter. I kid you not, Germans are googling the term Brennholz, which means firewood like never before. Russia's war on energy is plunging Europe back into the dark ages. We are talking about candles and firewood, and if this continues, which it likely will, people are going to freeze. Businesses are going to shut down, and it's going to trigger a recession once winter arrives. Now, there are analysts predicting that Europe's winter will be milder, at least at the start, and this should lower demand, giving the EU time to fill up their energy fuel storage sites. But this is a risky gamble because Mother Nature is unreliable, and this is primarily a supply problem. You can only cut demand by so much. Trying to pray for a warmer winter isn't a strategy. Now, Russia still has Europe in a gas supply chokehold. Putin has allowed the Nord Stream pipeline to operate at only 20% of capacity because of maintenance works, right? And there's a real possibility he could shut off the pipelines completely, and Europe isn't prepared for this. And as the Russia-Ukraine war continues, this is becoming a bigger possibility with each passing day. I think we need to realize that Russia is weaponizing their commodities. They know that it is their only trump card in this financial war. They don't have the world reserve currency, and they don't have the SWIFT system, and all their dollar reserves are frozen. And this is why they are pressing on this one key advantage, which is their vast stockpiles of oil and gas. And this war is getting worse. Russia isn't very interested in peace talks anymore. One of Putin's allies, the former Russian President Dmitry, has made it clear that Ukraine backing away from joining NATO is not enough. He has gone on record saying renouncing its participation in the North Atlantic Alliance is now vital, but it is already insufficient in order to establish peace. And this means that Russia is aiming for either the complete annexation of Ukraine or at least controlling the Donbas region in the east. So there's going to be more fighting and more troops pouring into Ukraine. I won't be surprised if this war drags on till Christmas and well into 2023. And for many of us, this situation is a world away. But what happens in Europe doesn't always stay in Europe. The effect of Russia strangling European energy is going to affect us. The higher inflation climbs in the West, the greater chance of a recession for Europe. And if a recession hits Europe, the demand for goods and services are going to drop across the world. Because if Europe is broke paying for their energy bills, they don't have money to buy Japanese goods or electronics made in China. And all is not well in Europe, and the stats are showing that the biggest countries in the EU are in serious danger of plunging to a recession. Economies like Germany and the UK are facing less than 1% economic growth in 2023, and we have the entire EU as a whole having a growth of only 0.6%, which could turn negative once winter comes. We have the IMF warning the world that higher inflation is coming, and their predictions have always been off. Just take a look at the chart. Every 3 months, they update their predictions for inflation, and it has always been higher as time goes on. And the solid blue lines are their latest projections. They are saying that high inflation for advanced economies like the US and EU will stay around 5 to 6% well into 2023, while emerging markets will suffer from 8 to 10% inflation going forward. And this is not good news. The IMF is ultra conservative, and they are spin doctors, trying to tell us things that are rosier than what they truly are. I reckon true headline inflation is at least 2 or 3% higher than their numbers. And we have the head of the BIS, the Bank of International Settlements, telling everyone in the Jackson Hole meeting that high inflation is here to stay. He mentioned that the supply issues are going to become worse and inflation is going to get out of control. And interestingly enough, he has admitted that central banks have little power over supply side disruptions. They can't persuade Putin to pump more oil or open the gas taps. They can't negotiate a peace settlement. The only thing they can do is to raise rates and destroy demand. And this is where the EU is falling behind. So far, the ECB has only raised rates by 50 basis points, taking them to 0% interest rates for deposit. I have to say again, 0%. And this is during a time when the Fed funds rate is already at 2.5%. Do you see how ridiculous the situation is in Europe and how bad inflation can truly get? Now, Europe is caught in a deadly dilemma. They are caught. Their economy has been subsidized by cheap Russian oil for so long that one wrong move can collapse their entire economy. We have the ECB policy makers hinting that they are going to hike rates by at least 50 basis points or even 75 points in September. And if they hike rates right now, demand will come down for certain goods and services, but not much for energy prices. There's still a minimum amount of natural gas you need to burn in order not to freeze in winter, and energy prices, at least for now, are controlled by the Russian gas supply. It is a supply issue more than a demand issue. But if they don't hike, inflation will burn up people's savings, and if Putin really shuts off the gas completely, everything will get even more expensive. And as Zoltan Poza of Credit Suisse puts it, the real driver of Europe's economy is actually cheap Russian energy. He mentions in Germany, $2 trillion of value depends on $20 billion of gas from Russia. Now, Zoltan makes a compelling point on how the German economy is actually a leveraged product of Russian energy. And this means that if Russian gas goes away, it will affect $2 trillion worth of German economic value. Similar to how if all the depositors of a bank, they all rush to withdraw their money, the bank will get closer to default until it collapses. And this situation is so bad that Europe is now about to do the ultimate juggling act. They are about to hike rates while also injecting stimulus into the economy. It's like cutting out pasta and bread in the morning but then eating ice cream and donuts at night. And the president of the EU Commission, Ursula, just announced the need for emergency intervention in the markets, and that will come in the form of $280 billion worth of subsidies for higher energy prices. But we all know that is throwing gasoline on the fire. Now, EU leaders, they don't have a clear solution to solve this energy crisis. France has frozen gas prices and limited the price of inflation of electricity to only 4% a year maximum. Now, this is a double-edged sword. France is moving to nationalize energy producers in order to give big electricity discounts to consumers. But as we all know, this will come at the taxpayers' expense down the road. It is just shifting money from one pocket to the other, but even France can't do it forever. And these subsidies could expire this winter. Plus, right now, we have the French energy company EDF going after the government, saying they were forced to sell energy at a loss. And things are going to get much worse. The supply side of the equation is going to get even tighter than before. And this time, it isn't the Russians but Saudi Arabia and the Middle East. They are thinking about cutting production because you need to think in the shoes of the Saudis. The higher the price of oil, the more revenue they can earn and the richer they become. And with a volley of global rate hikes coming, this means demand will most likely go down, and that's why OPEC could introduce production cuts to keep the oil price high. And now we even have UAE agreeing with Saudi Arabia. Two of the biggest oil producers in the world are thinking of closing a few taps. Guys, we have been talking about this for a long time. Globalization is breaking down. The East and the West, they are all splitting apart and it's becoming a free-for-all. Every country is trying to survive and do what's best for them. India and China, they have been buying Russian oil at steep discounts for months, and now it's Saudi Arabia's turn to profit. And this is going to be a harsh winter in Europe because energy prices are going to be elevated. They're going to stay high. Inflation is going to stay sky high for quite some time. And I think in the short term, this is about if Europe can survive until March 2023 next year when winter ends and spring begins. Because if energy and inflation continues to soar and the ECB hikes rates, we could see Europe slip into a recession. Now, economists are already forecasting a 60% chance that the European economy will shrink for 2 quarters next year. And if mainstream media, they are predicting that odds, at least to me, it's probably 70 or 80% at least. In fact, we have UBS saying that the Eurozone is already in a recession and the economy will shrink over the next 2 quarters, getting progressively worse. Now, minus 0.1% in Q3 and minus 0.2% in Q4. And this is bad news for people in Europe and bad news for the world. Now just picture this. America is already in a recession, even though the White House, they are burying their head in the sand. And now Europe is on the brink of a recession as well. And if Putin shuts off all the gas taps for permanent maintenance tomorrow, he can probably trigger a crisis next week. So how bad will a European recession look just for the United States? Now we can see that the US exports a lot of goods to countries like Canada, Mexico, and China. But if we just sum up the top 5 EU countries on this list, we're talking about Germany, Netherlands, France, Italy, and Ireland. These 5 countries contribute around $184 billion to the American economy alone, and that's more than China. And if these countries plunge into a recession, American businesses and companies are going to suffer. Not only do you have a domestic economy that's shrinking, and now Europe is going to buy less stuff. This will worsen the recession and can easily cause another third or fourth quarter of negative GDP growth. Now, things will get very bad in the next 6 to 18 months. We're already witnessing many countries suffering from depreciating currencies. Rate hikes are going to suck money out of the economy, and this inflation hell won't end until one of two things happen. Either the war suddenly ends and energy supply restores to pre-war levels, or the economy has a meltdown thanks to high interest rates and demand is totally crushed. Now, I hope for the good ending and world peace coming back, but the odds are towards the bad ending where everyone just gets a whole lot poorer. Russia and the West just can't agree on anything. And I have to agree with what Ray Dalio mentioned a few months ago about solving this inflation problem. The only way to reduce inflation is through deflation. And in his words, inflation was reduced by people and companies being painfully squeezed and reducing spending. That's always the case and will be the case this time. And until demand is totally crushed, inflation will remain high thanks to the energy supply crunch. And the road towards reducing inflation will come at a great cost. It will be stagflation. Economies will shrink, unemployment will go up, and prices are going to stay elevated for quite some time. The world has to rebalance and detox from all the sins of the past, all the funny money that's been printed. So let me know what you think. Is Europe already in a recession? Are they prepared enough to survive this winter? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.